Is this historic crash over? We're going to break it down for you guys, give you a recap of what happened over the weekend and what to look to. Welcome back into the show. All right, so I do want to thank our sponsor, that's Salt Lending. And if you look at one of the things they have over there to kind of protect you against these kind of crazy market moves like this, Salt Shield, the no liquidation solution. Even though Bitcoin didn't come down, and I think a lot of people, when you are looking at taking loans out on some of your major assets, the biggest key here is loan to value. Most people will never start to exceed 30, maybe even 50% of loan to value. So that is a good strategy because that is wide open wealth where you can take that and invest it into other assets, businesses, et cetera, that help you grow your overall stack in terms of assets. So check out Salt Lending. You can use our link down below. And that's my point right here on this lease or on this tweet right here, which is you don't get wealthy by gambling and borrowed money. You get rich by stacking assets. And that's the key here. Whether you're getting into digital assets, gold, even businesses, that's the key. Hold through the noise. Leverage is basically the killer here, unfortunately, and I think this is the problem that a lot of people are going to roll into. And real estate is the one I'm looking at right now that could potentially take a big hit in 2026. I won't get into that today, but I'll give you guys some insight on that, why it could be looming as a problem. Poly market is Octover. And I think a lot of people are questioning that right now. Are we going to see more highs throughout this next month to 2 months going into the fall? And I think this is the question that when you look at where the market came from just over the weekend, even though it was the largest that we had seen in history, biggest crypto liquidation, COVID crash, 1.2 billion, FTX, 1.6, today, 19 billion. And there's a lot of people that say this could actually be bigger than even that. So this is something that will get very interesting, especially from a lot of the situations that occurred over the weekend and on Friday. And of course, some of the things, if you look at this, top 10 crypto liquidations of all time, there it is, the US tariff on China. I think that was the cover for this that started to create a cascade event. Versus if you look at the AML crackdowns, Tesla's stance reversal, the overheated rally collection, this was our connection, this was back in 2021. So a pretty big event, guys, in terms of crypto in general. Hopefully you are in a position, though, where you guys are hodlers. Let me jump to this tweet right here. There was a lot here that in terms of trying to break this down. Binance reminded everybody of who really runs the market. A couple of points I want to hit on. Binance button stopped working. We had stop orders that froze. Limit orders got hung. Not only that, you had arbitrage bots also that were amplifying, where selling where price was still held. That was the issue that I think really caused the absolute mayhem in the market. And if you look at this chart, this is the atom chart, Cosmos. This went to zero. This is impossible for this to occur unless there were nefarious actions going on these exchanges. That's the concern that I think a lot of people are now waking up to. Don't forget this chart, guys, and these are the kind of things that really you have to be cautious with in any kind of leverage trading. I think most of you guys understand that if you're watching our channel. Now here's the CEO of Crypto.com, which I thought was interesting that he put this statement out. Regulators should look into the exchanges that had the most liquidations in the 24 hours and then conduct a thorough review. Granted, some of these were DeFi. Hyperliquid was on the list, but Hyperliquid was working somewhat flawlessly. It was just in the situation of what was happening in the moment. And then you look at Bybit, Binance. This looks to me a little bit more targeted at competitors. So keep that in mind. This is the kind of stuff that happens in these kind of unbelievable red days. Insider trading, minutes before Trump's China tariff announcement, we had a whale. Opened up $100 million short on Bitcoin. 4:30, the whale opens up $100 million short. 4:50, the Trump announces the tariff on China. This stinks so badly. And then, of course, 19.3 billion in liquidations hit the market, and the whale's profit, you guessed it, 192 million. So who is that crypto whale is the real question. There's a lot of speculation going all over the place. And if you just look at what's been happening in DC and continuing to really take a look at the market, but even with all of that happening, this was what really surprised me, is that even fear and greed right now, holding it around a 40. And remember, we slipped to under 20 back in April of this year. So Has the market looked at this as more of a manipulation event, more so than a tariff event? I know that might be the cover that has been playing on this. And of course, within that, you had Bitcoin extending their gain another 5% after this drop. So it's reclaiming 115K. ETH is also up 11% on the day, 4% away from pre-liquidation levels. This was October 10th. So are things back is the real question as we start to take a look into the rest of October. There are a lot of things happening around this. One thing that was kind of the alignment here that I think is intriguing because it does set up maybe a next leg for this. And this was my tweet. The most suspicious 72 hours in the trade war and crypto history. If you look at just the layout here, because this is getting into a lot of negotiations between the U.S. and China around rare earth materials. And let's not forget what crypto gets in terms of how all this. But Trump, of course, threatened the 100% tariffs. This was on Friday. This was by November 1st. Everybody was kind of throwing shots across the bow. And then Sunday, somehow, all of this gets settled over a weekend. So a crisis gets settled over a weekend. That's my question is there an opportunity for another, gray swan event to occur that could be driven into what's going on between the U.S. and China? That's the real question that I think is next up here. And just as a reminder, this is kind of the playbook that Kobe has looked at. And I would agree that most of these, in terms of tariff developments, has all played out. Trump puts out a cryptic post. He announces these big, crazy tariffs. That's what happened on Friday. After the market closes, yes, Trump doubles down. Saturday, the target tariff typically responds on comments. That's China. On Sunday, before the futures open, Trump posts an announcement, hey, we're working on it. That's, again, this is all architected. And then, of course, right into number 8, who speaks? Well, that's Secretary Bessent, which is exactly what he did. He spoke today and appeared on live TV reassuring investors over the next 2 to 4, various members on Trump's administration will tease trade deals. So you're going to see that happening between now and that next meeting with Xi. And then he'll announce a new trade deal. Stock will go crazy. Crypto will go nuts. And then here we go again. Step 1. Repeat. So I'm in agreement. This is the playbook of how liquidations, wealth, and manipulation is architected in the and of course this happens all the time, guys, but the stuff that doesn't happen is when all of these exchanges start breaking. That's the problem that really occurred overall. I want to go to a clip real quick because this was what President Trump was doing while the markets were crashing. Take a look.
Thank you, everybody. Thank you. Your taxes are coming down. See, everyone's happy, honey.
That's awesome.
We've done a good job. Yeah, we'll run through the 9 holes.
All right, so that happened over the weekend. And remember, all the markets were crashing, mostly crypto markets, and positioning. And I think that, in essence, was probably Trump not even worrying about this. So, intriguing times, guys. Now, here's the play from Scott Bessent, who went on to talk about this. Take a look at this one.
They also go on to say, through China's military-civil fusion strategy, the PRC increases the size of its military-industrial complex by compelling civilian Chinese companies and research institutions to support its military and intelligence activity. Some of those companies that do that trade on our exchanges. You have a huge lever to pull right here to take off those Chinese companies from our exchanges and not give them the ability to sell their shares to perhaps, in some cases, unwitting investors. Will you pull that economic lever?
Maria, I can tell you, everything's on the table. I am optimistic that this can be de-escalated, but we're willing to do whatever it takes and to adopt whatever posture it takes.
All right, so key statement there from Bessent was everything's on the table, but we don't think it's going to go that far. And I think this is one of those things kind of reassuring the market because this is a factor going forward, so much so that when you consider where China is today versus where the U.S. is in terms of negotiation, this goes into whether or not we have the leverage. Take a look at this clip.
Just to you're arguing you think that the U.S. has lost leverage here. I mean, Joe, you were just making a comment, I think, before. You think America has the leverage here.
I do. Yeah. Well, I think, I'm not saying America doesn't have leverage, but I think Beijing thinks, right or wrong, that it has the strong hand right now. Well, number one, the export data today shows that China is exporting to other markets and is becoming less dependent on the U.S. market. Second, I don't think they think that Trump is going to go through with these threats, particularly the tariff threat of 100% on November 1. He's done this before. He's backed off, not because of China, but because of domestic pressure. And let's be honest, food prices and other prices now are going up, putting the president in a more vulnerable position when it comes to raising tariffs.
All right, so some of the things that she pointed out is kind of the position that Beijing thinks they are in, which is a position of strength. If you do look at the data for September trade, exports are up 8.3% year over year. That's versus a 6.6 what was thought to be the case. Imports 7.4% year over year, and then the trade surplus reached 90 billion. So there are some signals here that could kind of point in that direction. The commodity imports kind of tell the same story. But I think the broader implication is how long can China withstand a major impact from the U.S. and whether or not the U.S. can withstand that from being able to implement that onto China. But 2 points that we were kind of getting at earlier is that Trump is in a position where he kind of just reassesses a lot of this, and he's been using tariffs as his number one targeting and negotiation ploy. The question is whether or not Beijing and Xi think that this will work going into it. So you've got the meeting that is confirmed right now between Trump and Xi Jinping. This is set for coming up in Korea. They were canceling this last week. Remember that there wasn't enough there to get it done. Trump was, again, probably playing a negotiation ploy. They've reassessed, and after a crazy market over the weekend, have repositioned for this. And China, of course, behind all that, you've got Chinese, the Renaissance Bank now reportedly in talks to raise $600 million for a funding investment in BNB. So, boy, crazy stuff ahead for all of this. This is another, just so we know who he is, this, of course, is the co-founder and chief customer service officer over at Binance. Look at this statement right here. If you've incurred losses attributable to Binance, like some of the issues that we just mentioned earlier, please contact our customer service to register your case. We're going to review your account activity individually and then analyze the situation and then provide compensation accordingly. Now, I've seen apologies come out. I've seen all sorts of situations with these exchanges. This one, I think, was so heinous that them going to this next step, maybe they'll do this with a handful of accounts to try to reposition the market and get, I think, in good graces with traders, because this is an issue right now that Binance is facing overall. Now, with all that being said, now you have Axios reporting that JP Morgan announces another 1.5 trillion U.S. investment initiative. And some of the things they're hitting on is to go into these major sectors. This will be everything from AI, tech, likelihood, of course, direct equity and venture investments. Possibly we'll see stuff moving into blockchain and crypto. Now that Jamie Dimon is all in on this, this will be a big step in the next direction. Tom Lee, who is the #1 investor out there on Wall Street right now, and there is a reason that he's saying buy the dip. The biggest reason, of course, is Tom Lee is the chairman on one of the biggest ETH treasuries, if not the biggest ETH treasury out there, Bitminer, and of course, buying the dip, kind of selling his book. However, he has been right in most cases, especially on his Bitcoin calls and on his Ethereum calls up to now. Ethereum has not played out the way that I think they want it to just yet. The real question is, can it do it going forward? Here was him talking about how this crash is a gift. Take a look.
We were looking at Friday was the possibility, at least, that some of that selling, or maybe even a lot of that selling, came from margin calls at that time.
Andrew, there's always been a lot of leverage in crypto. I think that the volatility and leverage is what has drawn people into that space, especially when you get outside of Bitcoin and Ethereum. Those two are generally not held on margin. I mean, there is some leverage with what they call perpetuals, but that's why they held up so well over the weekend. But this liquidation that was triggered over the last 3 days, the estimates are at least 19 billion of liquidations, but it's probably understated. It might be 4 times bigger. It's the largest since 2021. Essentially, you have to go back to FTX. JP Morgan's announcement today really ties into why investors should stay pretty constructive on the U.S. I mean, JP Morgan, the biggest and the most powerful bank in the world, is investing $1.5 trillion into the U.S. And of course, now we have this big tailwind as blockchain is an initiative that Wall Street is building products on. So I think there's a lot of reasons for investors to stay optimistic. I think the sell-off Friday is giving us a bit of a gift.
All right, there you heard it, a bit of a gift, continued bullish nature toward what we're seeing from Wall Street. And this gets back into the thesis that I've had for a while, and that is some of the core assets, when you think about the top 10 handful in terms of blockchain assets, digital assets, that continue to be the cornerstones of where this market is moving. Now, granted, there's going to be some altcoin winners, and there's going to be some meme coin winners, yes. The problem is there may not be as many in comparison to what we've seen in previous cycles. So that, I think, is the question of how to invest this out. How do you play this market for the next few months? And I think right now the blue chips are the winners. If you take a look at Tom Lee, he's even going into the discussion of why gold is pumping and how it has an effect on crypto. Take a look.
Everything's about crypto. You found a reason gold's up, and it's because of crypto. Not directly because of crypto, but you think the incremental buyer in gold there's gold-based stable coins, and people need to buy gold to back the stable coins. And that, you think that's enough to be up $92 all the way up to a new high?
Well, there is an interesting correlation we found, which is when I look at Tether's supply of dollars outstanding, it really started to rise about 3 months ago, and that corresponded with gold essentially going up every day. I'm not positive of this, but I think stablecoins, including Tether, may be one of the largest buyers of gold today.
That's perfect. So the people that have been bullish on gold for so long and bearish on crypto and Bitcoin, they're finally getting their big rally in gold, and it's because of the thing they hate so much, crypto and Bitcoin.
Yeah, that's right.
That's so funny.
Tether is proving to be a good meeting ground between Bitcoiners and gold people.
Imagine if Tether had not purchased all that gold and instead just flipped over to Bitcoin or treasuries. You know, those are the kind of factors that Lee is getting at. And the other thing that you have to consider is whether or not his play on Ethereum is the best play. Well, he thinks it is. In fact, another 838 million more into Ethereum, and this is all happening during the chaos. So the stash is now setting at 12 billion, buying the dip and continuing to play out. This may be, if Tom Lee is right, this could be one of the biggest plays we've seen on Wall Street for quite some time. And of course, you got to look at the history of it. And you also have to look at the history of some of the other big players of Wall Street. This, of course, is BlackRock CEO Larry Fink saying there's a role for crypto the same way there is a role for gold. This is not a bad asset. This was a statement that he put out on the 60-minute interview over the weekend. This tells me that they are prepping traditional assets, or I should say traditional digital assets, to be a category that major investors will start to go in. This, of course, gives the green light, I think, for a lot of these family offices and structured capital in general to move to the next level. And if you consider silver, because it hit all-time high again, over $51 right now, if you consider this being a longer-term play, then it would make sense that the central banks are moving into it. However, I still believe gold is probably going to be the route. In terms of central banks continuing to add to their balance sheets, I think silver is just a backup right now. However, there are a lot of people in the silver business that think this is just a beginning for where the silver market is going. We've done a couple of videos on this. We've had Andy Scheckman on from his team talking about silver and where it could go well before the move started on silver, because there was a short squeeze primarily based on supply and delivery. That is an issue that I think we'll start to see maybe with gold, and it could push gold continue up, even though there are a lot of people looking at gold as being a liquidation event going into Bitcoin. So this market is going crazy in a lot of different ways. The real question is, how does it hold up over the next few months? One thing I do want to hit on this right here, when you look ahead, there's some key things happening for crypto holders. The 13th, OPEC is going to report their release. Their report will be released. You also have Jerome Powell speaking this week, October 14th. The 15th, the New York Fed is going to give some manufacturing data that'll be released. But other than that, you just have to look at it this way right here. Do not FOMO too much. Pay attention to the macro events. I agree with that last statement right there. Pay attention to the macro events because it will have, even though it doesn't have a direct effect, it has these carry-on effects that create these cycle manipulation models that start to occur in a lot of different areas of crypto. And most of the time it happens during these massive leverage areas. So I think this is the factor. I know a lot of you guys get into leverage. While I don't necessarily agree with that, I understand it's a strategy on all investing. It's been that way for Wall Street forever. I don't anticipate it's going to be any different in crypto. But what I do ask you to do is just be a little bit more cautious in how you're playing this out. If you look at this statement and the poll after the crypto's biggest liquidation event in history, where are we going to go from here? Some people say retesting the lows, then up. Many people say, no, we're on a V-shaped recovery from here. 56% of you are very bullish. And some of you saying that the market is over. I do not think that is the case. It is possible we could see another major event that causes a downward trend. The question is, will that happen before the end of the year? And will it flush out even another group of crypto holders going to the next level? If you look at the markets right now, Bitcoin holding on, this is on the daily, after a massive green candle coming up on Sunday from 110 all the way back up to 114, holding right around 114 to 115. Let's take a look at ETH. Also had a major green candle and continuing its climb right now above 4,200 as we're filming this. XRP had a major move also 3 days in a row, now holding back at 261, even though there was a massive liquidation on XRP all the way back down to around 130, holding in there. So one thing to take a look at also is where SWI is. SWI, of course, has had a nice little move after, again, hitting that low and retesting some of those $2 marks that we haven't seen in a very long time. Avalanche was another one that popped down to $17 on Coinbase. So it's interesting as we continue to see these majors. Let me know what you guys are betting on right now. Did you buy a dip? Are you in crypto still? Drop some comments down below. I'd love to get that. All right, make sure you guys are in the Diamond Circle. That's where we communicate with you. I put out a letter each week kind of recapping some of this, getting into the details of where we got to get ready to roll into these markets. I put out an email on Friday after the markets hit, what I was looking at to try to do over the weekend. So hopefully some of you got that and made a little bit on some of your trades. Not investment advice, but that is where I do it in the Diamond Circle. Email, it's called the Bear Market Edge. So check that out. And of course, follow me out there on X at Paul Barron. We'll catch you next time right here on the Paul Barron Show.